CleanMax has just got listed on the stock exchange. The company is renewable energy which provides solar and wind and hybrid solutions to its clients. Joining me to talk more on this is Kuldeep Jain, who's the CMD of CleanMax. Thank you for joining us on NDTV Profit.
Thank you for having me here.
So I'd like to start by asking you that, your RHP mentions a capacity to the plans. So what sort of plans can we see in the next 12 to 18 months?
So as of December 25, we have about 6,000 plus megawatt of contracted capacity, of which about half or 3,200 megawatt is already built, and which implies that the remainder, which is 2,800 megawatt, is under construction to be commissioned within the next 2 financial years. And therefore, we are on a base of 3,000 megawatt, if you add another 3,000 in 2 years, that's about doubling of the capacity in 2 years, and that's what we can expect to see.
What's going to be your competitive edge going forward?
I think our edge has always been that we make solar and wind power, but sell it directly to the end consumers who are large corporates. And 85% of our customers are credit rated AA, AAA or multinationals. And a large part, nearly 80% of all new volumes we do in a year is repeat business with the existing clients. So our real edge is huge customer base of fantastic clients who are repeating business with us for other plants in other states for their growth, and as a result we've enjoyed tremendous growth.
So your renewable space tariffs have been reducing for solar and wind specifically. So how do you think that will affect the margins, and what does the current mix look like between solar, wind and hybrid, and how will it evolve over the next 3 to 5 years?
I think there's 2 things to note here. First, on tariffs, our tariffs for another 3,000 megawatt which is contracted to be built is about 3.6 rupees. And this is it's high because we go directly to the end customer. In contrast, that of listed peers like an NTPC Green, Adani Green and so on is closer to the 2.5 to 2.75 mark, because they supply only to the discoms who then sell to the direct consumer. So our tariffs have always tended to be higher because we sell on a disaggregated basis to the end customers. Secondly, what we focus on is returns we are making on the investment we make. So if the tariffs reduce because the cost to put up a plant reduce, that's a win-win. We made the same return. So our equity payback for all projects built in the last 3 financial years was about 2.5 years. And our equity payback for lifetime of projects was about 3.5 years. So actually unit economics have improved in the last 2 years, and this is combined with fantastic growth.
So the company was making losses in FY24 and it bounced back in FY25. How sustainable do you think that would be going forward, considering the listing also happened at a bit of discount? So how do you see that, and also the free cash flows? Could you give us visibility on that as well?
So our cash profit after tax for last year was around 340 crore rupees. So it's quite a big number. And in this year itself, in the first 6 months, we've made as much PAT as we made in the last year. And in our kind of business, the valuation or the way people look at it is EV EBITDA multiple. Right, not just on a PAT basis, because you don't, once you've built a renewable plant, it's just a series of cash flows that comes in. And on a EV EBITDA multiple, we were about our offer price in the IPO was about 17 times FY25, which is much lower than 27 times FY25 EV EBITDA for other listed peers. So it's conservatively priced, and there is a lot of sustainable growth.
Customer concentration was mentioned as one of your risks. How do you plan to sort of diversify across geographies and clients?
So we have about 36% of our energy sale revenues comes from our top 10 customers. Right, so on average, a top customer takes about 3.6% of our energy sales revenue. So it's not very concentrated in the first place. And we have over 550 customers. So as we grow, that natural diversity does occur. So we do have 6,000 megawatt of total contracted capacity, but our contract volume per group captive customer is only about 13 megawatt. So it is actually reasonably diversified in our view.
Okay. So your IPO proceeds were earmarked for debt repayments. How much of that has been taken care of with the proceeds, and how will it affect your interest cost and leverage?
So, out of our primary issuance proceeds of 1200 crores, 1125 was used for debt repayment at a typical weighted average cost of about 8.8% of interest cost. That's about more than 100 crores of annual cost savings for us. That said, we have always been conservatively levered on a net debt to EBITDA basis. So that for us, as CleanMax, has been 4.6 times. And the industry median or average is about 5.5 times. So we've always been lower net debt to EBITDA. And yes, on day one of the IPO, you raise money. It's always more prudent to repay the debt, bring your interest burden down. And over time, as new projects come up, you'll keep borrowing for those as well.
All right. How do you plan to manage your policy risks in the business? Also, if you could throw light on the fact that the business is to the commercial and the industrial players, how sustainable will that model be in the future?
So the interesting thing is that our customer segment, which is commercial and industrial players, comprise 50% of India's power consumption, right? So it's a over 3 lakh crore rupee market. And today, only 7% of those customers are buying green power on a bilateral basis. But those who are buying are saving above 30% on cost without any capital investment by themselves. And you're saving a lot of good money for doing the right thing. You reduce your carbon footprint, you improve your ESG scores and so on. So as a result, you will see that over 150 of India's 500 most valuable companies have already adopted green power and are increasing the share of green power. So my point is this: we are industry leaders in a space where it's a 3 lakh crore rupee market, only 7% penetration, but that penetration is rising rapidly, right? And we are the industry leaders, right? So I see a lot of good times ahead.
All right. With India's renewable energy target of 500 gigawatts, where do you see the most opportunity coming from? Would it be decarbonization, green hydrogen, or anything else when you feel the capacity should be increased?
I feel like greening of our electricity networks is the number one task, because we are going to electrify so many things, particularly if electricity is cheaper, right? Because it's greener, it's cheaper. The second mega trend, I feel, which India has been on a path of, is greater consumer choice in electricity. Consumer choice has benefited all industries, whether airlines, banking, telecom, and so on. It's not state monopolies, it's consumer choice. Same way in electricity, the utilities provide the common carriage and charge you for the carriage, but consumers have a choice to buy cheaper, greener electricity. And that is the big mega trend in my mind. Of course, then all other sorts of what we do with those green power electrons. Can hydrogen be green, not brown? How will we store units? Those are all things at the flank which will come up. But enabling greater consumer choice, initially with industries and commercial, but ideally even with residences like yours and mine, will help move the green agenda of this country forward.
Thank you so much for speaking to NDTV Profit.
Thank you so much for having me.